Hey everyone, Couch Investor here. Welcome back for another video today. As requested, I've made a quick Disney video regarding the earnings report. Lots of interesting things to talk about. I will keep it as short as possible. We're going to talk about the subscribers, the growth, the impact on the parks, and especially Mulan going on Disney Plus in September. Very interesting, and we're going to go and look at the charts as well. Usually during earnings call, I'm on Twitter, so if you want to follow me on Twitter, it's couch_investor. I think my link is up there on my profile, so go follow me for more information or just engagement in general. So without further ado, let's dive into this. All right, so first let's talk about the good news. The good news is that the subscriber growth keeps on increasing. At the end of the quarter, there were 57.5 million subscribers. At the end of last quarter, or in May, I believe, there were 54 million subscribers. But as of 2 days ago, there are 60.5 million subscribers on Disney Plus platform. But on all platforms together that Disney offers, there are 100 million subscribers worldwide, which is insane growth. It took actually Netflix almost, I think, 7 years or so. We can see here, it took Netflix 7 years to grow to 57 million subscribers. It only took Disney Plus 8 months. Obviously, Netflix had to build the whole infrastructure from scratch. Disney already has lots of content to offer. It works with Hulu, ESPN, obviously the Disney brand, and now they actually have a new brand that they acquired a couple of months ago in the Fox deal called Star. So Disney Plus wants to have their presence internationally under the name Star. So it's going to be, I think, Disney Plus Hotstar or something like that. It is already starting, I believe, in India, and it will probably be growing all around the world internationally because, like they said, Hulu is only known in the United States. It has zero presence internationally. Disney Star or Star alone has more presence internationally, and probably the name Star will be known more and more as time goes by, but we're going to read about that in a bit. Now, another thing I want to mention is that Mulan is actually going to be available on Disney Plus, I think September 4th or something like that, but is going to cost $30 for you to watch that movie. Now, I'm not sure, still not sure actually, if it's a rental or you're actually buying the movie so you can watch it over and over again. Remains to be seen. I really hope it's not a rental because $30 for a rental is pretty expensive, and you have to be a subscriber to Disney Plus to actually be able to watch the movie. So it's actually killing two birds with one stone. If you want to watch that movie for Disney, you will have to subscribe and pay an extra $30. It's pretty expensive, I think, for a movie, but they need to make their money back on that movie actually. But they said this is a one-off. It's not going to happen to all Disney movies that are coming out. So I believe the new Christopher Nolan movie will not be available on Disney Plus as of now. I've read some places that it will be available on Disney Plus and in the theaters in the near future, but that remains to be seen. And actually Mulan will not only be available on Disney Plus, but it will also be available in theaters, I think in Europe or around the world, where governments actually accept or allow people to go to theaters. As of now in the United States, that's not allowed, so probably a lot of people will be watching it from home. Now here's a question and a tweet from someone on Twitter. Imagine if Disney could charge $30 per month for a premium Disney Plus tier that gives access to all Disney films at the same time as theatrical release, and have it be successful. I would really like to know what your thoughts are on this idea. Let me know down in the comments below. I think, in my opinion, $30 per month for a premium tier on Disney, even if you get access to all the new movies that just came out, is pretty expensive because, well, how many Disney movies are coming out each year? I don't think that's a lot, and $30 per month is a lot. It's pretty expensive. It's double what Netflix is asking right now, and you get exclusive movies just for Netflix for the same price as you're paying each month. Doesn't matter if there are new movies or if there aren't any new movies in the theater. Now let's look at some of the articles and the earnings report, and then let's move to the charts. Alright, so like I mentioned, Disney is launching a new Star branded streaming service internationally. Now what does that mean? So Disney plans to launch a new general entertainment streaming platform overseas in 2021 under their Star brand name. Now, the CEO didn't give too many details about the platform, including in which country Star would launch or pricing, but he noted that it would include content from ABC, FX, Freeform, Searchlight, and 20th Century Studios. And like we said, they reached 100 million subscribers overall to its streaming offerings. Now he added, in terms of general entertainment offering internationally, we want to mirror our successful Disney Plus strategy by using our Disney Plus technical platform, bringing in content we already own and distributing it under a successful international brand that we also already own, which is of course Star. He continues on saying and explaining why they are trying to do so and how it could affect Hulu. So I think it's important to look at the differences at how we plan to enter the market. Hulu aggregates third-party content. This will not. Hulu has no brand awareness outside of the US, like I said. So this is a big part in expanding internationally, in my opinion. All right, so going back to the earnings numbers. So overall, Disney said its revenue for direct-to-consumer and international division increased 2% year over year to $4 billion, while the unit's operating loss grew from $562 million to $701 million. That is usually what happens when you open up a new service and invest in it. Parks are gradually reopening, like we said. For example, the company's total revenue fell 42% year over year to $11.8 billion, and earnings per share for the quarter showed a loss of $2.61. Now, regarding the parks, their closure resulted in a $3.5 billion loss. Parks, experiences, and products revenue for the quarter decreased 85%. Like we said in last videos, this segment is one of the biggest revenue segments for Disney. So obviously when this closed, a lot of their revenue went away. Decreased by 85% to $1 billion, and segment operating results decreased $3.7 billion to a loss of $2 billion. Now we know that they reopened some of their parks worldwide, especially in the United States and China, but what does that actually mean? And does that even contribute a little bit to the revenue in the maybe next quarter or so? So they actually answered that question. So a lion's share of the loss came from the closure of the domestic parks and Disneyland Paris, which were closed for the entire third quarter, while the China parks were reopened for a portion of that time. Now, Disney's CFO, Christine, noted that the surge in Florida virus cases hurt airline travel, which did impact the company's initial park projections. Well, if nobody wants to fly, nobody can go to Florida except for people that live nearby. So nonetheless, the company is seeing a positive net contribution from Disney World being reopened at reduced capacity. That's very, very good. And Disney CEO again noted that a park location would not be in operation if it would lose money. And he noted that the company was confident that the number of park visitors would continue to increase as people regained confidence. All right, so as for Disney, the video I made was not so long ago, so it's pretty cool to see that one of the two scenarios actually happened. So as I said, earnings report, the stock could go up to around this price right here, which is exactly where we're at today, or going down. So this scenario we can gladly delete. That's earnings. We're fine right here. Obviously, there is a gap, a big gap between yesterday's close and today's opening, but I don't think the stock will go down anytime soon. I feel very comfortable in the stock staying at these prices right here. As we can see, it broke resistance from beginning of June. If we can continue and create a solid base at these prices right here, that would be awesome. But as I said, for the long term, I think Disney is a must-have, especially with the direct-to-consumer segment growing each and every quarter, and we probably outgrow every segment in the next couple of years. Right, so to conclude, I'm pretty positive with Disney's growth. I think there's still a long way ahead of us, and it's good to see that parks are actually contributing to the revenue and the income of the company, even if it adds 30% capacity, 25, maybe a little bit more in China. It's still very good to see that. I am a strong believer that Disney will keep on growing year over year, and with all the content that is coming to the platform at the end of this year and the beginning of next year, all the Marvel content is going to be insane and drive subscriber growth to new heights, as well as opening up to new countries in Europe. in September, and at the end of the year they should be growing strongly in Europe and in Latin America. So like I said in my last video, I'm extremely bullish on Disney, and this is only the start in my opinion. Yes, the pandemic has hurt the company and will hurt the company in the next 1 or 2 years, I believe. But after that, I think the company, the direct customer service will be huge for Disney and will probably balance the balance sheet way better in case something similar happens in the near future or in the longer term. So that will be it for this video. If you liked it, consider leaving a thumbs up, and if you haven't subscribed yet, maybe now is the time to hit that subscribe button. And like always guys, take care, stay safe, and see you all in the next video. Bye bye.